Hello and welcome to another session on our YouTube channel, BeneFX Trader. Today we'll be talking about support and resistance. First of all, I would like you to like our videos and then share our videos and subscribe to our channel so that you can see more videos as we roll them out. Today we'll be talking about a very important aspect of technical analysis, which is support and resistance. Support and resistance in trading is very, very important for every trader. Uh, it is a very, very important aspect of trading that every trader must put into consideration. Now, support and resistance in forex trading are levels where price is expected to reverse or bounce. They are simply price turning point levels. These are those, they are levels where price will meet a level of force and then price is rejected. The support, also known as demand, and resistance, also known as supply levels, are areas where price is rejected once or in multiple times. Price will get to this level and kind of turn back due to some force that is being applied. The force can be a buying force or selling force. Now, support is known as the floor where price touch and bounce off in response to market demand. Now, price is dropping, and then there's a level of force that meets price to push it back up, to push price up, and that's called demand, market demand. While resistance is the ceiling where price touch and bounce off in response to market supply. Price is going up, and if there is a supply, price tends to drop. So there are two forces, two vertical operating forces: the demand, which is at the base, and the supply, which is at the. So if price is going up, it is expected to meet supply force, market supply force, whereby it tends to push it or drag it down. Now, as price is going down, it tends to meet with market demand, a kind of force that tries to push price up. And that when as time goes on, when price meets the demand and supply force from market, it tends to move in a wave-like manner. So it's not as if you just have price going up and up into the moon. It will go up to an extent and then turn down at a particular extent and then goes up. So it's like a wave. Now, support or resistance line can be drawn on any time frame, whether on 1 minute chart or on 1 month chart. You can find these levels, these support and resistance levels or areas on the 5 minute chart. You can also find them on the 15-minute chart or on the 4-hour time frame. So it's not restricted to a particular time frame on the chart. You can find support or resistance areas on any time frame at any time. All you need to do is look towards the left of your chart, drag the chart towards the right side so that you can see what has happened in history. Then you now find the levels where price is rejected or price is being pushed to a particular direction, vertical direction. We have strong support area or resistance area. Now, there are areas where price will meet a very strong force and it tends to react strongly to that particular market force. Now, if the support is very strong, price will go up and it will cover a large number of area before it will reduce in the velocity or speed. And if it's a strong resistance area, price will get to that area and tends to drop. It will drop with a big force. And these levels are called strong support or resistance levels because price will tend to meet them and then react to them on more than two or three uh, occasions or multiple times. And we also have weak substance areas. These areas, price will meet them and then test them again, then break such areas because they are weak. They are not strong as the uh, strong support or strong resistance areas. Now, uh, for us to really work with support and resistance in trading, we have to monitor candlestick patterns. What kind of candlestick patterns uh, is developed? What kind of pattern is developed at that particular area, the support or resistance area? Is it a doji candlestick pattern or the engulfing bar candlestick pattern, or is it the pin bar you can spot at that area before you now uh, come to a conclusion that this is going to be a support or this is going to be a resistance area? You also monitor price action patterns at support and resistance areas. Example of price action patterns are the double top, the double bottom, head and shoulder, inverted head and shoulder. At support and resistance areas, all these patterns they tend to develop before price start to head towards where it's going to. Price will always go to where it's going to. So, but it leaves a kind of trail to tell you that this is what is going to happen. I'm going up, so I'm leaving behind inverted head and shoulder, or I'm dropping, so I'm leaving behind a double top. So for you to really confirm that this particular level is a support or a resistance area, you tend to see some price action patterns that tells you that this is going to be a support, this is going to be a strong support, this is going to be a weak support. Now let's look at the diagram on the screen. We have a little boy playing with a football and he drops the ball and the ball hits the floor at point A. The ball bounces and hits the wall at point B. Now point A serves as a support for the ball. Point B also serves as a kind of resistance to the ball before the ball bounces and touch point C. Then the ball ricocheted and hit the wall at the back of the boy before dropping to the floor. So the ball impacted 4 points: A, B, C, D. So these 4 points serve as support and resistance to the ball. That of a taller man that drops a basketball, for example, on the floor. The basketball is being dropped and you can see it bounced the rooftop, then drops and bounces in a wave-like manner. But as the ball bounces along the room, the force of the bounce reduced. So we can see that points A, B, C, D, E, and F, then G are points of contact where the ball meets with force. Now at the base you have the support at A Then you have two resistances at the top, which is B and D. So that's the way price also, this illustration can be compared to the way price meets with force. Force meets price at A, C, E, F. Force also meets price at B and D. So the force that meets price at the bottom or at the base is known as the support. The force that meets price at the top is known as the resistance. Another illustration is that of a little boy that tries to throw a football to a man on the street. Now, throwing the football to the man, I think the football missed the target and hit the top of a vehicle, bounced to the roof of a terminal, then also rejected and bounced to the floor before bouncing off to the sea beside the location. So the force is generated, falls to the the top of the vehicle to meet another force that pushed the ball later into the sea. So the force is created here. The ball drops to meet support at point A here before bouncing up to meet resistance at this point B, then before dropping to meet support. So at the point of the ball dropping, it meets with support, but at the point of the ball bouncing up, it meets resistance. So the same analogy or the same illustration is used to compare the way price moves. When price goes up, it meets with resistance. If it does not meet with resistance, price continues to go up. But when price falls, it meets with support. If it does not meet with support, it continues to fall. Now we will look at the candlestick. These are candlestick patterns that gives a resistance formation. You can see two bullish candles that develops and then forms. Price now forms a little bearish candle at the top. That amount of little bearish candle is a level of force being created by market supply. So you have, no matter how little the force may be, you have your resistance. Even if it's as little as this particular small bearish candle, it is still seen as a resistance. Now you have a greater resistance here and a much more greater resistance here. So your resistance is for every bullish set of candles, and you now find the following candle to be a bearish candle, you have a level of resistance at that particular point. So resistance varies. When you look at this diagram, the resistance levels varies. The resistance level of this particular engulfing bearish candle is much more powerful than the resistance here or here. And this particular pin bar, the resistance is even much more powerful than the level of resistance you find here. So for you to have a resistance area or a resistance level, there must be an opposing bearish candle that follows the set of bullish candles. So in as much as you don't have any bearish candle following the set of bullish candle, that means there is no form of resistance whatsoever, and price will continue to go up. But when there is a level of force that meets price as it goes up, then you can now call that particular force resistance. The same illustration is seen for support formation here. Price drops with big candle and now meets a small, there's a little form of support created as a result of the small bullish candle here. So this small bullish candle, though price may continue to go down, but it is seen as a support, although it can be called weak support, but it's a level of support. This level of support, this is another level of support, but this is a better level of support that can either make price to reverse and go up, or can give way to price for price to fall. But this kind of support here can be called tweezer bottom. This is a much more formidable support because the level of force of the level of bearish force here is being matched with the level of bullish force. So price is more likely to reverse at this particular point. Now here you have a bullish engulfing bar overshadowing the two bearish bars. So this support being met here is much more greater than other previous support. Now look at this particular overshadowing bar, bullish bar. This is a much more larger force, a much more greater force than whatever price that has been forming initially. Now look at the pin bar here. This shows that price as it drops meets a much more greater bullish opposing force that is trying to reverse price back to where it is coming from. Now look at another illustration here. You have cluster of price ranging from price descended here. Now it ranges at this particular point where you have a kind of battle between the force of supply and demand, where you have the bulls struggling to reverse price here. So this particular place of, let me call it, fight or battleground can be called your support area, because the buyers and the sellers are struggling to have dominance, and eventually the buyers won and price is pushed to the top. But the seller stepped in and said, oh, that is as far as you can go, we want to have our way now. And you can see the struggle that happened here before the sellers eventually won the fight and then took price down. So this particular area at the top is known as the resistance or supply area, while the area at the bottom is known as the support or demand area. At times there might not be much selling force here and price will now continue to go up, or at times there may not be much buying force, and after this bearish candle price start to drop. So it now depends on what the kind of level of force that price meets as it continues in its journey. Is it a great force or is it a very weak force? So we look at the chart. This an image of USD CHF on a weekly chart. Price rose to this level and met with some level of resistance and price dropped. Price dropped to leave a support behind here and start to rise to still come back to this same resistance level to now give us a strong resistance level, because price starts to tick to drop again. So had it been price is able to break this level, then this level can be called a weak resistance level. But since price is rejected at this level, you can call it a strong resistance level. Also, look at USD CHF on 4-hour chart. You can see price tested this particular level to have a resistance. Look at the way price rose up, then formed a pin bar or a doji, then it dropped to come to this particular level where price had already tested for some time before leaving a swing here. We call it Judas swing because it's a deceptive swing that will have deceived the sellers that, oh, we have a breakout. But at the end of the day, price reversed, and the sellers will be trapped here. Now, as price reversed, buyers will consider what happened here on the left, which is, oh, we have a resistance. We may likely have another resistance at this point. So, and you can see how sellers stepped in to push price back to this same support level. So sellers, as buyers look towards the left to see where there is level of resistance, and sellers towards the left to see where there is level of support. So they step in at these critical levels. Buyers, sellers, they step in at support and resistance levels. You can see what happened again. Sellers stepped in, buyers stepped in, sellers also stepped in. Then you can see price eventually broke the support line and consolidation started. Another illustration is seen on Euro USD chart, 1-hour chart, where price rose, met with a resistance level that dropped a bit, then pushed up, met with another resistance level, dropped, then pushed up, and rose to this point where it met a much larger force and dropped. But buyers were not able to, were still convinced that they can push price up. Price was pushed up to another resistance level. Sellers stepped in and pushed price down to this support area. Before it's been pushed up again, sellers stepped in, and at this particular junction, at this particular area, the sellers were having their way as price drops. But price met with a much larger force here, and this particular point forms a much stronger support, and price is pushed up to meet with a resistance here. Meanwhile, we have a support level turning to resistance level here. The support level is here, but it now became a resistance level here, and sellers stepped in and pushed price down to the same support line here. So, and then buyers like, oh, we have a support, let's bank on this support here and push price, and you can see what happened. Start to have higher highs and higher lows to now have a bullish development. But this particular line is going to be our strong support line, and definitely sellers may likely step in at this strong support line. Now, this illustration shows USD CHF 1-hour chart where price is ranging downwards. Price is with a steady movement, and it drops steadily, forming lower lows, lower high, lower low, lower high. But you can see a trend line being drawn here to show the support and the resistance levels. The support level here is being met with some level of force. Price was pushed to this level, to this resistance level, and then sellers stepped in at this resistance level to drop price towards this area. As price descends, you have the first point here, the second support point here, you connect with the trend line, and it now forms a descending channel. Descending channel, you now have your support area, the first support area, the first resistance area, second support area, second resistance area, third support area, third resistance area, then fourth support. So the sellers are in control, but the buyers step in occasionally to push it to a particular level before the sellers step in to push price downwards. Now let's look at Euro USD, USD CHF rather, 4-hour chart. You can see what happened. Price rose to this point, and then we have like a doji, then a big engulfing bar, signaled reversal at this point, and you can see what happened. Price dropped and met with a support here, but this support is a weak support. The support is not really too strong. Buyers are able to push it to a level, then sellers step in to meet another smaller or a weaker support, and sellers stepped in again and push it to a point where we now have a bullish engulfing bar to now give us a strong. So until you see these candlestick patterns like the bullish engulfing bars, the pin bars, the doji, the arami, until you see them on your chart, you may not really have much conviction that price is going to reverse, or price is at a support or resistance level. But for this particular image, the bullish engulfing bar here, because this bar, bullish bar, covered how many candles? 1, 2, 4, overshadowed like 4 previous candles to give the buyers conviction that now they can step in, and they stepped into a point and push price to this resistance area. Sellers came in again to push price, but the buyers took control and pushed price further higher. Now at this point, you now have like a double bottom, this first bottom, this second bottom, or we can say like inverted head and shoulder. This is the first shoulder, this is the head, second shoulder, to now give traders conviction that, oh, the reversal has started, and you can see what happened. Price start to go up. Lastly, you will look at Euro AUD 1-hour chart. You can see what happened here. This is a support level, this is a higher support level, and price was pushed up to a particular point where you have a top, leaving with a bearish engulfing bar, pushing price downwards. Then the bulls came in and pushed price, but not to the initial top. The bulls were not able to push price to this resistance area, and sellers stepped in and pushed price downwards, and definitely price will go further down. So that is all about support and resistance in forex trading. Support and resistance does not only occur in forex trading, it occurs in volatility index trading. Let's look at the chart here. This V75, volatility index 75. Price, this is a real online real-time price movement of volatility index. Price met with a support here, and you can see what happened. I initially thought the resistance will occur here around the 61.8% Fibonacci level, but you can see what happened. Price broke that level and then continued up. Now you ordinarily think price will stop at this level, but you can see what happened. It tested the level and then also break upward. So the resistance here is broken. Price will come and peradventure come down to form a support here before continuing up or reverse outrightly. So two things may happen here. Price will either form a bullish pin bar here and reverse, or price will develop, then form a support, and then you have a bullish engulfing buyer and price will continue up. But to identify the support and resistance on this particular junction, you can see a level of bearish force trying to push price downwards, but the bulls were much stronger and you can see what happened. They push price upward. You can see the battle between the bulls and the bears here before a support was formed. You can see what happened to price. So that is that about support and resistance. It cuts across different time frames. Let's look at the daily time frame. This is the daily time frame. You can see what happened. Price formed a resistance here, another resistance here, support here, another support here. So as you can see what's happening on the chart now, price is heading upwards to the resistance area here. So the price may get to this area and break through to form another support on the area before continuing up, or price may just reverse outrightly from this area and then come down towards the support at the bottom. So that is that about support and resistance. You can drop your questions. If you have questions, drop them, or visit our website to learn more on support and resistance. Our website is www.binfxtrader.com, and we want you to like our video, share our video, and subscribe to our channel to see more of these videos. Thank you.